Good morning. Today is November 28th, Wednesday. This is Bud Fox with imtftrade.com. And what I'll be doing over the next few weeks is talking about bottom picking and trying to trade something called the January effect. First things first, let's get to our disclaimer. This video is for educational purposes only. We do not promote you to trade any sort of financial instrument. If you do trade any sort of financial instrument, we recommend going to your professional investment advisor and asking them what to do. So again, trading is risky. This is for educational purposes only. Now, let's talk about the January effect. What is the January effect? It's supposed to be people just selling off stocks to take tax losses, so stocks just get hit, mostly stocks that are near their lows, and it drives the price down, and then once all those tax sellers are out, the stock turns around and usually runs typically in January. Sometimes it starts earlier. A lot of people have been looking at it lately, and it's something I like to do every year. And I have a bunch of different ways that I go about finding these things, and we'll go into them, and we'll go into how we trade them. So the first thing I'm going to look at is FTE networks. Now, why do I like this? Well, number one, you can look at the daily chart, which is right up here. Back in June, it was 22. Yesterday, it hit as low as $3.20. Quite a sell-off. Now, stocks have been having a lot of revenue growth. On the fundamental side, they're up to about $350 million in revenue, and down here it's like under a $50 million market cap. Now, why is it selling off like this? There's probably some tax loss selling. I also believe there's probably some note conversions going on. When you see indiscriminate selling like this for no real reason, I know they have notes coming due, so I think that's another reason as well. So first, now on the daily, you'd obviously want to wait. Now we do have a dot underneath, but there's a lot of room to run. So we'd like to see these crosses move down, which has not happened yet. Then the crosses would move down, and when we trade above the crosses is usually when we get in for a long-term trade. But I am Bud Fox, and as you know, Bud Fox has been known to break the rules. So we tried to look at day trading it. Now we sold off hard. Now I haven't seen it consolidate in a while like this, so I just was doing a consolidation in the 10-minute. We have all these oversold crosses coming in. So the first thing that happened was we broke that consolidation, hit the resistance dot, came back down. Now we had bought some, still have a little bit left. I guess we got in at around 339. Yeah, I got 1,500 left. I'm not going to be too risky with it if it goes back down. But there's still a lot of room to trade this thing. This thing could have a pullback to those dots at 396. That's a potential trade right there. And then ultimately we'd like this to go long term. But we need to see more than just what's happened. So this could very well be a bottom, especially if we hold that support dot. But we don't know for sure. Now, how do we get something like this? Well, let's go to our scanner. Now, I'm just going to refresh. There you go. So now you can look right now. So you have all your setups here. I'll go to a daily. I think in the general setup, I'm looking for all U.S. stocks. Everything's none. Price I'm looking for under 20. Generally, if you're looking for something that's gotten bashed apart, it's not going to be trading at 100 unless it's like Apple or Amazon or something like that. So I'll go to the daily, and what do I have here? So I'm looking, my trend strength I have is a bear greater than 10. You can set it for whatever you want, play around with it, and see what kind of opportunities it throws at you. And right here we've got, I guess 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 20, 30. It's about 30 here. I think there's more. And you can just pull up the charts on whatever stocks go in here, and you can see what they look like and make a determination. Let's just say we mess around, we want less things to look at. You go right here. Now this is CTL CenturyLink. I know this one because this was on our list last year, and we bought it around 1440. It went as high as 24. Now it's back into the $18 range. Again, it just looks like it's trading above a support dot as well. However, we do have a cross above it. So ultimately, we would like it to trade above that cross at 1880. But this was we did this last year. Went from 1448 up to as high as 24. We did this as a trade. Also, this pays like a 10%. I think it was like 14% at the time. So we bought this in the income portfolio as well. I usually find at least one or two every year that I could pop in an income portfolio, which is nice. But ultimately, again, so if you look here, this is being held down by those prior crosses. So ultimately, we'd like it to break through that level. Then we can either buy the breakout, or you can wait for it to pull back to that level. And ultimately, your stop would be below that level. One thing about using this, what I call a wall of crosses, that's your line in the sand. So if it trades below there, whether it's one break, whether it's just an arbitrary 50 cents below it, whether you want to see it trade 2 or 3 bars underneath that level, however you're using your stop is how you would use it, and it's just defined so the only thing you can control in trading is how much money you lose. So you can control. You need to be in control of that. Otherwise, that is it for today. We will be going into more opportunities that we see, more on how to do it in the future. I just wanted to give you guys a quick update on how we do things. If you have any questions, you can send us an email, info@eiicapital.com. This is Bud Fox. Good luck trading.